have our, let's not say moderator, let's say referee. We will have our referee, Andrew, on stage with us too. And now I'm going to pass it on to him. The debate will begin, but also last reminder for everyone, no photos, no videos, no voice recordings, no live streaming. OK， 所以希望大家呢，待会儿我们就要正式开始了，拜托不可以拍照，同时呢，我们也是不可以录影，也不可以直播的。再次谢谢大家，谢谢。
Well, good morning, ladies and gentlemen. My name is Andrew Neil. I am your referee for this morning. We've had the rumble in the jungle, we've had the thriller in Manila, and we've now got the tangle in Taipei. With Arthur Hayes, co-founder and chief executive of BitMEX, and Professor Nouriel Roubini of New York University, the Stern School of Business. They're both going to head-to-head this morning on all matters crypto. Give them a round of applause. So this is how we're going to do it. We're going to begin with opening statements from them both. 3 minutes long. I'm going to keep them to 3 minutes in the interest of fairness, and then we're going to open out the debate between them. So let's begin. The tangle in Taipei. Nouriel Roubini, you're first. 3 minutes.
Okay. Yesterday I gave a keynote speech where I spoke about a lot of the shady behavior occurs in this particular industry. Conmen, criminals, scammers, snake hole salesmen, and so on and so on. So it's all abstract. I'll make it honestly personal. You have here next to me a gentleman, and when he set up his business, he boasted that there were out there millions of what he called degenerate gamblers, and specifically what are these degenerate gamblers? They are retail suckers, right? Non-accredited investors who are not supposed to be investing in this stuff. And not only we're gonna peddle these instruments for them, but we're not gonna leverage it 5 times. We're not gonna leverage 10 times, not 50 times, 100 times. So, with 100 times, if the price movement's even 0.5%, you're wiped out of your position. Guess what? There is a whole nice Twitter feed called BitMEX Wrecked. Wrecked means a fact in the ass, where every other second, somebody has been liquidated by these guys, and thousands of them have gone into financial ruin. Of course, this thing is not regulated anywhere. It's set up in the Seychelles. And the guy boasted once and said, go and try to sue me in the Seychelles. Of course, that is impossible. So you can do anything. No MAL, no KYC. Everybody gets wrecked. You get commissions, fees. You get a whole liquidation fund out of people getting liquidated. So you make money by people going into financial ruin. In some months, half of your revenues are from this liquidation fund. You have even internal insider trading desk, supposedly market making and so on. So that's what's your business model, and it's exactly representation of what this industry is all about. No regulation, no audit. You can talk your book, you can do anything, you can front-run your clients, you can screw them financially, and it doesn't matter. If they're leveraged 100 times, if they're not a creditor, so be it, right? And officially, US investors are not supposed to be doing this stuff, right? Because they're subject to US regulation, but anybody with VPN can avoid the IP and go and do investment with you guys and avoid it all. So this is a system, and it's just an example of everything that is sick and rotten in this particular industry.
Okay, Arthur Hayes, your 3 minutes.
I was gonna talk about Bitcoin and all of the great things that this industry is doing, but this man over here, I don't even want to call you professor. I probably couldn't sit through one of your lectures. Just went straight for me. So let's go at it. Yeah, BitMEX 100 times leverage. So what? I mean, you could trade this type of leverage anywhere you want to go. In the United States, we have things called ETFs. There was a great one. I think it was called TVIX, and it was short volatility. A one-day spike in the VIX in February 2018, essentially the ETF went to zero. In the most highly regulated financial market in the world, highly liquid, all these nice banks, people with suits on, went to nice universities, and your ETF went to fucking zero. Wrecked. Now, I'm not trying to force anyone to use BitMEX. We just have a website. We don't even do any marketing. Somehow, a few 100,000 people have found our little oasis and started trading. Buyers versus sellers. We're not making people trade Bitcoin. No one said you have to go out and own it and send it to us and use it as margin. People saw that this was a phenomenon. There was something happening here. There was real value to what is being created in this system. And they decided that they wanted to speculate. Well, people speculate in everything. I'm sure if we put some chickens on the stage here, I put up a QR code, and I let you bet on which chicken was gonna win, we would have probably $1 million traded in the next 5 minutes. Human beings love to speculate. And we're just gonna give them an opportunity to do it in a very safe manner, custody people's Bitcoin, and run an honest platform.
Okay. Well, it's good that we got off to a quiet start with both sides agreeing on almost everything. I want to come on to some of the issues of substance, but let me just pick up from your opening remarks. Professor Roubini, are you saying he's a crook?
I'm saying it is essentially makes money out of retail suckers. There are security laws in the United States, in every country, that are trying to protect small investors. If some investments are highly speculative, highly risky, we decide as society that unless you are an accredited investor who has a certain level of income, a certain level of net worth, you cannot do certain investments because people are being conned by all sorts of frauds and scams, or they do things that are too risky. That's why there are these kind of rules. Now, what happens is that in these unregulated exchanges, anybody can go there, be leveraged 100 times, and lose their entire financial wealth. So there are laws, and those laws are being skirted by being in regulatory regimes in which there is no regulation, there is no jurisdiction, and thousands of people who are retail suckers. That's what they're called. The lingo in this market is there are whales and there are retail suckers, and they've been totally, royally shafted and wrecked. I know personally of tons of individuals in New York who told me, we went into Bitcoin, we bought at the peak, and went last year from 20,000 down to 3,000, and they've been totally wiped out. I know there are facts that 20% of students in the United States, and it's $1 trillion of student loans, 20% of students in the United States have used some of their student loans to invest into these instruments, and they've been royally screwed. So there are reasons why there are these laws. These people don't give a shit. They don't give a shit about anything. They're just like drug pushers, right? They get you addicted to something, and if you're then royally screwed, so be it, and I make money out of you, even out of your liquidation. That's what you guys are. It's just despiteful.
Arthur Hayes, you're a drug pusher.
I mean, those weapons of mass destruction. Maybe I should just be the Saccharin family and sell some opioids. I think those are probably a better business model.
But what do you say to the regulation point that the regulations are there to protect people unless you're above a certain level as an investor? I mean, why are you in the Seychelles? It can't be for the weather.
Oh, it's actually a great place. There's beaches, sands, beautiful people.
No regulations.
There definitely are regulations. We are regulated by the Financial Services Authority in the Seychelles. Now, maybe
how would that compare with the
US-centric Roubini who thinks maybe the New York DFS and New York AG is the only game in town, and we need to bow down and take an ass fucking from the US government just because it's regulated. Now, I don't know if that's really not my game. I didn't really want to sit on bottom bunk with Bubba all day, so I got out of that situation. So I don't think that just because the U.S. does something that everybody else needs to follow.
No, but you will understand that in the scale of global regulation, the SEC, New York, the regulatory authorities in London or in Frankfurt are on a slightly different scale than the regulatory authorities in the Seychelles.
It just costs more to bribe them.
Costs more to bribe them?
Yeah.
But that's not really an answer, is it?
It is an answer. What do you think?
So how much are you?
Banks?
So how much are you paying to bribe the Seychelles authorities?
A coconut.
All right.
There is absolutely no regulation in the Seychelles, and that's why they're there. I mean, it's not just the United States. We have the entire G20 that has a whole financial fraud task force that has rules about anti-money laundering, about know your customer. Why?
Have you
wait in the moment.
Have you tried to set up for a Bitcoin exchange, Nouriel? Have you tried recently to sign up for a Bitcoin exchange? Let me know how easy it is to go through the Know Your Customer and AML restrictions.
Okay, you avoid it all. There are rules. Why? Because there are terrorists, there are criminals, there are tax evaders, there are human traffickers. There are all sorts of criminals out there. There are lots of shady stuff happening. And the G20 as a world, we decided, even Steve Mnuchin, who is Secretary of the Treasury of the United States, and he's not exactly a Bolshevik, he said, we cannot allow crypto to become the next Swiss bank account. That's why we have this international regulation. That's why they crack down on offshore financial center, because there is trillions of dollars of criminal activity going on around the world.
Fiat currencies. Where is Bitcoin in all this? You're talking about billions of dollars of financial crime
and you
happening.
guys,
hold on.
All of these exchanges.
Hey,
there is no KYC.
I'm the referee.
There is no
and you
KYC.
Hey, quiet.
There's no email.
When I say quiet, you get quiet. That's for both of you. There's no point in the two of you talking over each other, because then we can't understand a word you're saying. It's actually hard enough when you're not talking over each other. Let me try to get away from the personal and get to some of the issues. Arthur, here, tell us what you think are the main benefits of crypto, and then I'll get the professor to respond. Why is it an advantage? Why is it a good thing? Why do we need it?
So I think we need a choice. In an age where we move from analog to digital, and all payments will be in a digital format, physical cash will be outlawed, and physical cash is the most anonymous form of payment that we have right now. Once that is stripped away and people see bare that their whole financial existence will be monitored and controlled by government, large corporation, who name it, they will look for something different. Now, Bitcoin represents an opportunity. Instead of using courts, laws, and violence to govern how money is transferred between individuals and parties, we use open source software, cryptography, and math. Now, which one is successful? I don't know, but as a society, we definitely need a choice, and that is what Bitcoin represents, a choice for a different way to govern financial transactions.
Okay. Professor Roubini, what do you say to that?
I mean, as we know, Bitcoin is not scalable. It does 5 transactions per second. Visa does 25,000 transactions per second. I believe all in financial innovation about banking the unbanked and helping the poor, but that revolution is called fintech. It has nothing to do with crypto, it has nothing to do with blockchain. It's based on artificial intelligence, big data, and the Internet of Things. It's revolutionizing already today payment systems, credit allocation, insurance, capital market, asset allocation. In payment system, everything is already digital. It's not a question of being analog as opposed to digital. There are payment systems today used by billions of people for billions of transactions a day, not 5 transactions per second. It's not scalable. They're called Alipay in China, or WeChat Pay, called UPI-based system in India, called M-Pesa all over Kenya and Africa, called Venmo and PayPal. These are real things, real business model that make money, that are used to do transactions for real goods and services, while this industry of crypto is what? There is no transaction, not even this conference allows you to use Bitcoin to pay for it because the price has fallen 30% in a week, so you guys will be bankrupt if you had accepted Bitcoin. It's not used for any real transaction. What is it? It's a business of one shit coins being traded against another shit coin, one shit coin against the other one, and then the middlemen like him, they make money. They don't give a shit whether it goes up or goes down, as long as there is volume. He makes a bucks throughout the commission.
And you take,
so he doesn't give a
you
shit
take
about
conference
anything.
fees, right?
He makes money. If it's all shit coins, if are worth nothing, as long as there are people trading it, he makes a bucks.
Okay, I think I got the point.
He lives on shit,
right,
on crap.
I
That's his business model. Leverage 100 times crap and that cesspool of stinking shit coins.
Okay.
That's your business model.
Yeah, I think I got the point, and I'm glad we've moved away from the personal.
It's not personal, I'm sorry.
No,
this is the business which everybody is talking 24/7, their own books.
Well,
I have no long
all right.
in any of this stuff.
Okay.
So I'm the only one.
Your monologue is over.
But you take conference fees, right? You got paid to be here, didn't you?
This is a debate.
Somebody paid you, right?
Hey, Arthur. This is a debate, not a monologue.
This is charity, it's a
Be
public
quiet.
good.
Arthur, let's try and pick up on the substance. What the professor was saying there. If you look at Alipay, WeChat, these are digital transfer services, doing about $15 trillion of business a year. Hugely successful in China, very fast, very efficient, and pretty cheap as well. Why do we need crypto? Because these are not crypto.
Absolutely. And as someone who goes to China very often, I think WeChat Pay is very convenient. But for that convenience, you obviously pay for it via having all of your transactions monitored by Tencent and at the same time, essentially the Chinese central government. Now, that might be fine for paying for a watermelon, but what if you are a political activist and you're denied banking? That's happened even in Hong Kong, right? So people who are denied financial services in a centralized system because we want convenience. Now, obviously, a decentralized peer-to-peer blockchain is not going to be as fast as a centralized system like Alipay. However, it has a different use case. Privacy is expensive. And if you value it, you have to pay for it. And over time, I definitely see that there will be solutions to this scalability. We're talking about a technology that's 10 years old versus credit cards, which has been around since the 1950s and 60s, physical cash, which has been around for thousands of years, and banking in its current form, which has been around probably since after World War II, the whole system was set up. So for 10 years, you're lodging all these complaints. Why aren't everyone buying a cup of coffee when all the infrastructure has been in place for half a century? I think that's a bit naive.
Right, but what is the ever? I mean, the professor makes the point that it's not scalable. And you say it's only been around for 10 years, but in terms of digital technology, 10 years is an age. And we still haven't seen evidence that it's scalable. But when will we see that?
I don't know. But at the end of the day, it's also a demand issue.
He's right, it's not scalable.
Well, its current form, it does not compete with speed. I would agree with that. But at the end of the day, do we as a society value that? Right, it could be 10 times as fast, but nobody uses it. Who cares? We need to wake up and see that we actually want financial privacy. And I don't think people really realize that yet. They need to be in a system of complete control like an Alipay, or maybe it's Facebook Libra coin, or it's Fed coin, or it's ECB coin, whatever the fiat representation of digital money is. We need to be in that system. We need to get fucked by government first before you realize that you might pay to use a different system. And maybe this experiment called Bitcoin will look a lot different in 5 to 10 years' time.
But why
He's making 2 points that are incorrect. He
Right.
says it's a decentralized system and is anonymous. First of all,
I never said it was anonymous.
Huh?
It's not anonymous. I would agree with that.
Yeah, it's not anonymous. Actually, law enforcement authorities prefer transactions that are illegal that are occurring on Bitcoin because they can go after the public key and find out who's behind the private key and catch you. So actually, they prefer that. This idea that
then how does that square
you are
with your argument
censorship
that all the
resistant
criminals
or
use it?
anonymous is not true. It's totally false. So it doesn't give you any type of privacy. If you have an authoritarian regime, they can still go after you and all your Bitcoins and find who's behind it. And it's not decentralized. The mining is all centralized oligopoly. The exchanges are all centralized exchanges. 99% of all trading occurs on centralized exchanges. The decentralized ones have no transaction, no liquidity. The code developers are judges, prosecutors, police. They change the code whenever they want it, like in the flop of the DAO. And there is more concentration of Bitcoin wealth than in North Korea. The Gini coefficient in Bitcoin is 0.88, while in Korea is 0.86. So you have a system that actually is just the opposite of going and helping the poor and the unbanked and so on. We have massive concentration of wealth, massive concentration of mining that leads you then to power, to extract lots of things. And it's not a decentralized system. It's just bullshit. It's not secure. It's not decentralized, and it's not even scalable. At least in the current systems, we have systems that are secure and they are scalable, even if they're centralized. Vitalik Buterin spoke about the inconsistent trinity, that you cannot have in crypto something that is decentralized, scalable, and secure. And not on any one of these 3 dimensions, crypto satisfies even one of them, let alone 2 of them. So It's total flop.
Let me get Arthur just to reply straight to that. Not decentralized, as claimed, not scalable. What was your third point, Professor?
Not secure.
And not secure. 3 points. What's your answer?
Well, I think I'm going to go into the secure one first. So Bitcoin is worth, I don't know, about $200 billion as of the price today. It's essentially a massive bug bounty for anyone who can crack the encryption to SHA-256 and break Bitcoin. There's $200 billion sitting for you right there for the taking. I think that's a great use of your time if you're some sort of nefarious character that Nouriel Roubini thinks is lurking around these conferences. Yet it has not been done. Now, exchanges, I would agree, who have poor security practices have lost, stolen, all sorts of manner of their customers' Bitcoin. But if we are talking about people taking back their financial sovereignty, don't store your fucking Bitcoin on an exchange that you don't need to trade with. And people will learn this over and over again as large exchanges lose their money, that Bitcoin is for personal financial sovereignty. Hold your own keys. You're much less likely to lose them. Now, in terms of the whole decentralization argument, you probably say, oh, the mining pools control up to 50% of mining. Well, the mining pools are made up of smaller miners. And Bitcoin itself, has not really faced this 51% attack happening on the network and destroying the value. Because at the end of the day, if a miner said or colluded to say, okay, I'm going to reverse transactions, essentially their infrastructure would be worth zero, because they have essentially destroyed the whole value proposition of the millions of dollars that they put into this. So by bringing together a group of self-interested parties to run the same software, it is not in their interest to violate these rules, and that's the whole point. And that is why it is more secure than a centralized system.
Professor?
The crypto system is totally not secure. If somebody steals my credit card information or my bank information, it takes me 30 seconds. I call the bank, they block it, I'm refunded in full. I pay a small fee. There is deposit insurance. If you're in crypto, if somebody cracks through your thing, and there are easy ways of doing it because 99% of all trading is occurring on centralized exchanges, and therefore it's very easy to hack them. Your money, and we have dozens of episodes of these things, is gone for good. You have crypto robberies, people coming at gunpoint and say, what's your private key? And they're stealing your money, and it's gone for good. If somebody comes to gunpoint, tells me, take me to your ATM machine, they can steal $300 out of me, not $300 million, okay? So it's totally unsecure. And by being unsecure, instead of being a sophisticated financial system, it goes back to the Stone Age, to the Paleolithic. So the only way to make sure that nobody can steal your money is to have it offline in cold storage. It's like having a big cave underground where you keep your Bitcoin, and then you have to write down your private key on a little piece of paper, hide it somewhere in the walls or in the mattress, and hoping the rats are not gonna eat it up. And if you lose your private key, you're fucked for good, and your $1 billion is gone. So this is the level of security of this industry. It's worse than the Stone Age, okay? And the money is stolen right and left every other day. While in the legacy financial system, whether it's my credit card, whether it's my bank account, if something goes wrong, I'm paid in full all the time. So I'd rather keep my fiat currency than your lousy crypto money.
You can have your fiat currency. Nobody's telling you have to have Bitcoin. It's your choice. That's the whole point. We're talking about choices.
But didn't we see an example of what the professor was talking about recently when Quadracax, the Canadian company, the guy who ran that died, and he hadn't told anybody what the encryption keys were, and so people couldn't get into the system. Doesn't that bear out what the professor's saying?
$500 million money gone for good.
No, I think it bears exactly what I'm saying, that exchanges hold your money. If you hold your money on an exchange, you are at risk, right? If the whole point of Bitcoin and some of the other cryptocurrencies is financial sovereignty at the individual level, if you pull it with everybody else, you're taking the same risk that you were trying to avoid. So yes, exchanges can get hacked. Exchanges can have poor security mechanisms, and it's a competitive market. If you have a bad policy in terms of security and you get hacked, customers can leave, right? And then you have no value. So
this wasn't a hacking case. This was a case of the guy who died. The encryptions went with him.
Or pretended to die.
Though there is some doubt as to whether there was anything in the bank. But I mean, if the CEO of Citicorp dies, it doesn't mean say I can't get into my bank account.
And if the head of, I don't know the security policies at all the major exchanges, but I would assume that if you're running a real organization, if key people die, that there are ways to recover these keys. That means you ran a bad business. There are lots of bad businesses in the world, and they go bankrupt. as they should.
Let me try and look forward to what you see the purpose going forward of crypto is. I mean, am I right in saying it hasn't really taken off as a means of exchange or as a means of paying for things that you buy? That there's only, in terms of pure merchant provider transactions, is only about $2 billion a year is done. Is that its purpose, or does it have another purpose?
I think right now, given the, I would say, terrible user experience of purchasing Bitcoin and using it in consumer applications, there is no reason why you wouldn't pull out your credit card or your phone and use a centralized payment system. Now, if you're in a place where the financial services system doesn't work so well outside of the US and probably Western Europe, then that might not be an option. And actually, the clunky nature of Bitcoin might just be better than what you have. And while we're talking about very wealthy individuals, probably everyone in this room, and the few 100 million people who live in the United States and Western Europe, that's not the case for the other 5 or 6 billion people in this world. So yes, is Bitcoin being used to buy a cup of coffee? No. But we're talking about a 10-year-old way of completely changing the way humans interact with money. And money's a very personal thing for people. If you're going to tell someone to now use a completely new system of payment, they're going to chafe at that. And that's why I think the Facebook Libra development is interesting, because now a few billion people will have the opportunity to experience the joys and pitfalls of digital payments. And at that point, maybe crypto will look a little bit less scary to them.
Professor?
That's incorrect. Actually, digital payment systems are much more sophisticated and advanced in emerging markets than they are in Europe and the United States. You have 1.4 billion Chinese that are using Alipay and WeChat Pay. Cash in China has literally disappeared. Even the few homeless people and beggars in the streets, there's a QR code on WeChat, and you can give them money. That's 1.4 billion Chinese. There's 1.3 billion Indians who are using this UPI-based system. Again, smooth, no transaction costs, instantaneous money. You can bank all the poor people. You can do payment systems. You can do credit and so on. You have M-Pesa in Kenya and Africa, another billion people, okay? So actually, in poor countries, in emerging markets, in the Chinas, in the Indians, in the Asias, in the Africa of the world, we have payment systems that are much more sophisticated and they're digital than the US, where I still have to use a credit card, I have to use wire payments, I have to use checks and so on. So the revolution of fintech that provides financial services, money, payments, credit, micropayments, you name it, is happening and is revolutionary in emerging markets. Billions of people have access to stuff where they can do billions of transactions every day, and it's happening today at zero cost instead of these crappy crypto shit coins that is worth nothing, that there has no scalability, that nobody's using, neither in advanced economies or emerging markets. So stop the bullshit about emerging markets and banking the unbanked and the poor. It's just a total scam. It's bullshit.
Let me try and
keep on saying the same thing. They repeat it. We're gonna bank the unbanked. Instead, they steal their money. We're gonna provide financial services to the poor, and they steal their money. Okay.
Right. It would help if you didn't keep on saying the same thing as well. So let me get him to reply. Let me get Arthur Hayes to reply. What he's saying underneath all the rhetoric is quite simple. The developing world already has quite advanced, sophisticated, and cheap digital exchange mechanisms. It doesn't need crypto. What's the response to that?
Well, do you want financial privacy? I don't think people want it yet. If they wanted it, Bitcoin would be a much higher price than it is today. We're only talking about probably less than a percentage point of people who own crypto right now. Now, does that mean that it's not a valuable technology? No. Either A, it doesn't present a solution to people's problems right now, or B, they don't value that system. So I think as we move forward, and if the price of crypto keeps going up, Mr. Roubini has said it, went from 20,000 to 3,000, and now it's back at 11,000, but it's still a hell of a lot larger than zero. So obviously, people actually value financial privacy. Maybe it's centralized, decentralized, whatever you want to call it, payment system, because it's worth a few $100 billion US. Now, give me 50 years. Let's see what human society likes if their whole life is controlled by Alibaba, Facebook, Google, any of these large tech companies with their walled garden payment systems. I don't know. All I'm saying is, here's a choice. Here's a system that isn't controlled by a large company or a government. And if you want to participate in this economy, here's some Bitcoin.
But for most people, I can understand there'll be some people who put a premium on privacy. I get that. But for most people, they just want a cheap and convenient means of exchange. They want it to be secure. They want to make sure the money goes from A to B, nobody accesses it. Privacy for them is a secondary concern because for most transactions, they don't think they get anything to hide. I'm just paying me to you. So doesn't that leave you very much in a niche market, if at all?
No, I don't think so. I mean, gold is still, worth a few $1 trillion globally.
But no one uses that as a means of exchange. That's a store of value.
Well, it's a store of value, and when times get tough, it is a means of exchange. We're only in this sort of a fiat exchange system probably since, in our era, since the 1970s. Previous to that, we had a gold exchange standard, right? So countries still base their financial systems on a barbarous relic sitting in a vault.
But no one pays with gold now.
No, they paid with a banknote that theoretically could be exchanged for a weight in gold.
But that's not true either for fiat currencies. They're not gold-backed anymore.
No, exactly. I'm not saying that. But what I am saying is that Bitcoin could be a settlement currency. It could be a means of everyday payment. We don't know how it's going to be used. As I said, right now, it is too clunky to compete with centralized systems. But at the end of the day, will society value privacy? I don't know. Again, it's a choice. That's all we're saying, a choice. It doesn't mean you don't have to go and buy shit coins. If you choose to buy a shit coin and it goes to zero, that's your problem. No one put a gun to your head and say, go buy
it's not my problem.
purple.
That's why we have accredited investors and we avoid having retail suckers going into risky stuff. You don't give a shit because you make money, as you said, based on retail suckers leveraged 100 times, degenerate gamblers. That's your business model. So you want these retail suckers to be there. Otherwise, you wouldn't be making a penny of money. That's fine. That's your business, drug pushing. But the reality is that's what you're doing. That's the reality of what you're doing, okay? So there is no financial privacy. There is no financial anonymity. There is no financial scalability. There is no financial decentralization in crypto. There is no financial security. It's all talk. You keep on saying things and you repeat them and repeat them,
Just like you.
as if it was true. And when you take each one of these things, there is no privacy, there is no anonymity, there is no decentralization, there is no security, there is no transaction. You have created a bunch of shit coins. 81% of ICOs, a study suggests, were a scam to begin with, a scam. You take white paper, you copy exactly the same language, you change the title, and you launch it. Billions of dollars were scammed this way. So 81% of these shit coins were a scam to begin with. 11% of them failed, and the other 8% that was traded on exchanges last year lost what? 95 to 99% of its value, including the top 10, okay? And Bitcoin last year fell 85%, and even with the rally this year, is still 50% below the peak and has fallen in value by 30% in 1 week. No wonder that even this conference doesn't accept Bitcoin.
No, you've made
a
that
week
point
ago,
already.
somebody paid in Bitcoin. This conference will be bankrupt, losing 30% of its value. That's why no merchant uses Bitcoin for transactions.
Let me ask you this,
Only
Professor.
suckers get suckered in Bitcoin.
In the interest of trying to get you not to repeat yourself 10 times, let me ask you this. If it's as bad as you say, and I understand why you're saying it and what you're saying, why did it, when it went into what seemed like Bitcoin in particular, went into a precipitate fall, didn't in the end go all the way to zero? It did begin a bounce back. Why did that happen if people like you had seen through it? Why is it still around if it's so bad?
First of all, there are still tons of suckers out around. Secondly, anybody who has studied the market of Bitcoin knows that the rally that occurred in 2017, there's a study by a University of Texas researcher, all of it was driven by price manipulation, essentially the creation of Tether and using Tether to push up the price. Same thing has happened since April. The price spike that occurred since April is not like the last quarter of 17, that was all FOMO. It's not retailers coming back. The Google searches on Bitcoin are not up again. You have a bunch of whales trying to dump their tethers, and there's another billion of tether being issued, going and dumping that stuff and buying Bitcoin. And guess what? Went up to 14,000 on June 27. Now it's down below 10,000. Has lost 1/3 of his value.
It's actually at 11,000,
in 1 week.
sir.
In 1 week, okay? That's what's happening. So there is tons of study that suggests that this is the most manipulated market in the world. Yeah, there is manipulation of prices in lots of other exchanges, and people get prosecuted and arrested because these are regulated markets. But you have systemic spoofing, systemic pump and dump. There are 5,000 separate chat rooms where these pump and dump schemes are planned in advance. There is a long history.
Have you seen a Bloomberg chat?
Wall Street Journal
You on
showing
Bloomberg?
that. There is front running by the exchanges, probably including yours. There is wash trading, and there is a study suggests that 95% of all transactions just in Bitcoin alone are fake. It's a totally fake market. Price manipulation, fake transaction, fake markets. This is systemic. I mean, the degree of manipulation that occurs in this market is 100 times more than any other market.
I understand what you're saying, but a debate works if you let the other side say something. The clue's in the word debate.
There's something to say.
It's not just you saying the one thing. I want to take this point about the extent of activity, Arthur Hayes, because a lot of people think, as the professor has been saying there, that the apparent activity on exchanges is artificial. That a lot of it, wash trading was one of the things the professor mentioned. It gives the illusion of volume, but it's just traders kind of trading between each other. Bitwise did its research and said 95% of trading was artificial, to play to the professor's point in less emotive words than he's using. What do you say to that?
So first of all, I think that Bitcoin and cryptocurrency markets are the only real free market left in the world that are not manipulated. Just because you put the word regulated and you have, some government agency give you a piece of paper doesn't mean that you actually facilitate real price discovery. Now, exchanges can do whatever exchanges want. Maybe they fake volume, maybe they don't. But at the end of the day, it's perfectly competitive. Just about anyone, if they want to, can start their own cryptocurrency exchange. And at the end of the day, if you present a product where if I see a price on a screen and I go to purchase a particular asset and I don't get my fill, even though I see the price right there in front of me, I'm never coming back to your platform. So you can cheat, steal, lie, and all these things, but there are honest companies out there that are willing to offer a real service to customers, and those will be the ones that succeed. So if you want to be an asshat and be a charlatan, then you can get away for a little while, but the true companies that actually care about their customers will shine through, and they won't be able to hide behind some government regulation to cover the way that they fuck their customers.
But are you denying, it may be a free market, but a free market that's not regulated can be open to manipulation. And if manipulation means that I'm losing my investment and I have no recourse, there's no federal deposit insurance or anything like that, it's too late if you get it wrong.
Well, I think people...
Really, that's the risk.
People this term manipulation is used very, very broadly. At the end of the day, price, time, priority always takes precedent. And what I call the big stack rule. If I have more money than you, I can move the market more than you. And that's true in Bitcoin, in US treasuries, in anything. Right. So if you think that you, with your little small balance, are entitled to always make money, go fuck yourself. Because you need to understand that there are people with larger balances than you, and they will trade. And understand that. It's not manipulation if a larger trader moves.
Trading.
Yes,
we
price,
know
time,
the bigger
priority.
guy can not manipulate, but he has a bigger market clout. But as the small guy, you still want fair trading.
Yes, fair trading is price, time, priority.
Why is 95% of trading artificial?
I don't know if 95% of trading is artificial.
Well, a lot.
There's not.
Why?
Why? I don't know. So all I know is that price time priority. If I put an order in the order book and somebody jumps the queue in front of me artificially, then that has been violated. That is manipulation, not the price going up 50% and down 50% in a few seconds. That is not manipulation. That's just a market. But if you're telling me, and no one to date has said that exchanges are violating price time priority, they're not. Now, you might say that it's too volatile and somebody needs to step in and, contain these emotions of all these traders. Fine, that's a different argument. But if you're saying that exchanges are violating price time priority, that is real manipulation, and that's not what people are talking about.
Professor, let me ask you this. What do you make of Facebook's announcement of Libra, of moving into this space? What's your view?
Well, they're selling it as if it's a cryptocurrency, but it's not a cryptocurrency. It's not based on blockchain. It's going to be private, not public. It's going to be centralized, not decentralized. It's going to be permission, not permissionless. It's not going to be based on a trustless system, but a bunch of trusted authorities that are authenticating. But to me, that's a symbol of the fact that while crypto is failing, now people talk about enterprise DLT or enterprise blockchain, but the reality, and that's exactly the example of Facebook, is that all of these examples of essentially corporate DLT are blockchain in name only. They're private, they're not public, they're centralized, not decentralized, they're not distributed, they're permission, they're not permissionless, and they have a bunch of trusted authority authorizing transaction as opposed to a trustless system. So they're not really blockchain, it's just a term just because it's catchy. Because no corporation, no bank, no government, no nonprofit in the world would like to put on a public blockchain his P&L, his balance sheet, all the relation with their customers or their clients, because it doesn't make any sense. So that's why the CEOs of Wells Fargo, Bank of America, and MasterCard during the last month, they've said all of them the same thing. They said, we invested billions of dollars in blockchain proofs of concepts. We have hundreds of patents on blockchain. And guess what? We have not found a single case study where we can implement it and save a penny. So we wasted all this money. And speaking about doing it for banking the unbanked or transferring money to the poor people or remittances across the world or giving an ID to the refugees or money, there is a study of 43 case studies of trying to use blockchain for all this social good stuff around the world. Guess what? They did this study, and out of these 43 cases, proof of concepts, how many of them have led to a product that works? Zero out of 43. So all this bullshit about banking the unbanked and we care about the poor and all that nonsense and the refugee is just bullshit. There is not a single stuff that is a blockchain that's gone beyond the proof of concept that is a real product. So that's why I said not only crypto is the mother and father of all bubbles gone bust, but blockchain is the most overhyped technology in human history, is useless, and is no better than a spreadsheet, okay? It's no better than a database. Right. That's what it is. It's a total failure. It's a total failure like the rest of crypto.
Okay, I think I've got that, because on the 6th time it finally dawned on me. Arthur Hayes, let me ask you, what do you make of Libra? Is it really best to see it, as I think the professor was saying there, that it's really another development in fintech rather than crypto? Or is it a move into crypto by Facebook?
It's definitely not a cryptocurrency. Libra is a basket of fiat currencies, and it's a digitized version of that. Now, I agree with you that there are a lot of blockchain charlatans out there. We were trying to talk to venture capital firms in 2014 and 15. It was the whole, I'm into blockchain, but not Bitcoin. Basically means you're a fucking retard. And banks realized that because they got scammed out of it. Well, not scammed. They went into it willingly. They put the press release out there that they got into blockchain and they spent a bunch of money and they felt real good and their shareholders felt real good. And, the kumbaya happened and, all these consortiums charged $250,000 for a proof of concept. Yeah, I agree with you on that. But Facebook, I don't think ever came out and said this is supposed to be a cryptocurrency. It's just a digitized version of a basket of fiat currencies and will be programmable into their social media applications potentially.
So not crypto in you?
Absolutely agree.
All right, let me ask you this. As crypto develops, aren't you worried that it does get increasingly enmeshed in scandals. I mean, we've had this latest one now of the Attorney General in New York going after Tether. Tether thought to be a stable coin linked to the dollar, used by a lot of other cryptos because it had that link and it helped them with transactions. Now it's under investigation. It looks like $850 million seems to have gone missing. Nobody's quite sure. Doesn't that concern you that you're going to get more and more on that and that you get more reputational damage done to the whole crypto play?
Number one, Tether is not a cryptocurrency. Tether is a money market fund with a bunch of US dollars potentially sitting in some bank accounts. So
crypto uses it.
Yes, crypto uses it because they don't have banking access. So it does provide a valuable service to the industry. Now, what I found amazing about the Tether episode is after the New York AG went after them with this $850 billion, expose of the money not there, they were able to raise $1 billion in 2 weeks from the cryptocurrency community to keep Tether up and running. That to me says that the community values keeping one of the biggest companies around stable enough and came to their aid, just as the central bankers of the world come to the aid of the too big to fail banks. So we did for our own, and we kept the company alive. I think that's absolutely amazing.
That $1 billion, like the rest of Tether, has been created out of fiat. There is absolutely zero
Just like
It's
like the currencies in your bank account.
There has been zero evidence that there is real money backing actually Tether. If anything, actually, there is evidence that only 74% of Tether is backed by whatever reserves, and even that money, his finances have never been audited by anybody. There's a fraud investigation in New York, and one that fraud investigation is going to lead to indictment. The entire, not just Tether, but Bitcoin system is going to collapse because the run-up of Bitcoin in the last few months is totally linked to another issuance of $1 billion of Tether out of fiat, nothing, backed by nothing, and it's going to go bust.
So the Tether, which represents probably
See me in a few months and we'll discuss.
Less than 10% of the market value of Bitcoin, the collapse of that is going to lead to the unraveling of Bitcoin, which has no credit on top of it. I find that very hard to believe, Mr. Economist.
There is a study that suggests that 80% of the increase in Bitcoin in 2017 was driven by Tether. It's a research study, University of Texas.
Towards the end of this, but before I want one question, then I'm going to ask for your opening remarks. Let me begin with a question to you, Arthur Hayes. Where do you see crypto going now? Look ahead. We are where we are. You clearly think it has a future, unlike the professor. Tell us, where will we be in 5 years' time? Where will crypto be in 5 years' time?
I think that crypto is going to be $1 trillion plus asset class. Now, that's actually still very tiny. And all of the noise being made by the volatility of crypto, the doomsayers, the religious acolytes, that's just going to increase the awareness of people asking, what is this thing that everyone's talking about? Why is there so much noise going on? Let me investigate. Now, a large percentage of these people will not choose to buy Bitcoin or any cryptocurrency, but even if a small percentage of them, more than what we have today, decide to put a little bit of money just to take a punt on this call option, which is crypto, we are going to be a much bigger asset class. And with more money, more services, more developers, more bright individuals staking their entire careers on a change in the way that human society transacts value, this industry is going to blow the fuck up.
Professor, where, if anywhere in your view, will crypto be in 5 years' time?
Well, let's look at the facts. Thousands of shitcoins today have already lost, even with the recent rally, 99.9% of their value. They're gone. You take the top 10 below Bitcoin, in spite of the rally, even Ether, let alone the other top 10, is down still from the peak, 75%. The other ones are down 85 to 90%. And even with the recent rally that is totally driven by price manipulation, Bitcoin is still 50% below the peak and lost 1/3 of its value in the last week. This is not going to be $1 trillion asset class. This is going to be an asset class that goes asymptotically towards zero.
So, in your view, will there be crypto in 5 years' time?
Yeah, there'll be crypto, like, there are museums of failed coins where there are people that are collectors who are collecting ancient coins. There'll be some idiot who's going to be collecting Bitcoin and keeping Ether and Monero and something like this as a nice
You seem to know a lot of the names of the cryptocurrency for somebody who thinks they're going to zero.
Huh?
You seem to be an expert.
There are thousands of them. Every day there is another one. There's even Jesus coin, among others, really. I mean, they've created everything. But the
Is that worth
reality,
more than
the
Bitcoin
reality
or
is
less?
they're all shit coins. If you go online on Google and you type shit coin, guess what? There are
Your face comes up?
500,000 items, okay? There's a whole item on Investopedia called shit coin. Is a technical term of this industry, and there is one reason why this industry is called the shitcoin industry, because it's a cesspool of stinking shitcoins. That's what it is.
All right. Arthur Hayes, I'm going to give you, since I think we know where the professor stands.
Make money based on trading. You don't
No.
care.
We
You couldn't
understand.
care less.
I get
The more shitcoins, the better for this gentleman.
No. Repetition doesn't
That's his business.
elucidate anymore. I think we get it. Arthur is going to let you finish up since the professor began. Tell us, in your view, why is the professor wrong, and why are you still optimistic about your industry?
I'm optimistic in people having a choice. I'm not up here saying that Bitcoin or crypto is the answer to everyone's problems. All I'm saying is that there are problems in the world. We did things for a certain period of time with the same institutions and people involved in power. And if we believe in change, which I'm sure we do, because we all have smartphones and have internet-connected devices in our hands, which we didn't have in the last 10 years, change is happening. And if you want to be on the other side of change and stick your head in the sand, then when the meteorite comes, you can be extinct just like the dinosaurs. But if you're willing to say that human society needs a choice in the way that money is transferred in this new digital age, then crypto is a possibility. And at $200 billion plus, that opportunity seems like it's being taken up by a very small percentage of the population, and that will continue to increase over time.
Arthur Hayes, thank you. So that brings us to the end of our Tangle in Taipei. It was a good, clean fight for most of the time. Not all the time, but a good, clean fight. The Queen's English wasn't always at the forefront, and some of the language, I don't think I've ever chaired a debate before in which shit was used so often, but there we go. It's 2019, and we're not in the Oxford Union. I just want, before I go, you will determine who has won the Tangle in Taipei. As always, it is the audience that decides these things. But as you do that, and before you do, please, before we end this session today, thank Arthur Hayes and Nouriel Roubini for being with us here today.
Thank you all. 非常谢谢大家。